The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. What I posted into Tiger TV this morning is an old article and a video from 1987 from the Business Talk Radio, Nightly Business Report with Paul Kangas, and who since passed away. But the main thing is that it really describes what happened during the crash of 1987, what a panic was really like. Very, very similar, nothing like what we had during 2008. That was very orderly on the way down. 1987 was a true panic. It started in Asia when Secretary of the Treasury Baker said they couldn't come to an agreement, I believe, on trade with Japan, and Asia started to fall apart. But by the time Sunday night came around, it was pretty much headed lower. The Dow had been down 106 points the day before, on the Friday before, on October 16th of options expiration. But the reason why I think if you get a chance to listen to this video is to get prepared, folks, because I don't know when it's going to happen, but it will happen. And you want to be prepared for it, because it will probably be some type of a good buying opportunity. But at the time, you won't believe it will be. But it will be crazy. I will tell you this: I've been in this business a long time, and I've gone through a whole lot of stuff. Being stuck in things, limit days, against me 4 or 5 days in a row. Unbelievable stuff that's happened to me. But nothing was as bad as that October day on the 19th of October 1987. The other thing that I wanted to mention is Tuesday was the anniversary of the stock market crash from 1929. That was the big crash that we had during 1929, October 29th, and that was the anniversary of that. But anniversary dates, come and go, without too much problems. Now, I did post the first chart that I posted. And well, let me continue on with the 1987 thing. In 1987, we didn't have. Remember this: in 1983 was the first time you could put a desktop up to get your own charts. 1983 is when that started with CompuTrack, and that was when that started. But then we didn't have electronic trading or anything like that. Everything was done by phone, and the runners going into the pit and all that stuff. All that stuff is history now. We're all relating to these computers, and there is where the trouble might lie. I just tell you to be as careful as you can. Don't put any more money in your account than you absolutely need to trade. But just get ready. Remember, we had MF Global, stole about $1.1 billion from the people. Russell Wassendorf over at Peregrine Financial ripped off about $150 million. So just remember, folks, that this stuff is out there. You got to be really careful. You bury it. Someone asked the question, what do you do with your money? You bury it in my backyard so I can take care of it for you. I only have about 4 spots left for burying money, so please get to me as quickly as possible. But the other thing that we have going now is we've got the same type of euphoria that we had in 2000. I mean, it doesn't seem to be that way, but we do. We've had it with Tesla. We've had it with Amazon. We've had it with Google, Apple, Netflix. I mean, there's just one right after another. And even someone met Bitcoin. I have no idea what Bitcoin is, but we have the same type of thing going on here. And then we also have a possibility of this banking, a big banking fraud. And I've said since the beginning that this is based on a very, very long-term cycle going back 170 years, back to the 1835 banking crash, which took away the second U.S. bank. That was the second Federal Reserve Bank. There was the first U.S. bank right after the Civil War, and before the Civil War, and then there was the first one was 1835, and then the last one was the one that Andrew Jackson, he took us off of the Federal Reserve, and that didn't start again until much later, which was 1913 at Jekyll Island. So we're going to have it. I just don't know when it is, and but it'll give you some types of premature, it'll be moving in that direction. It's just, you're just not going to come in someday when the market's up and it's going to be down 10, 12%, something like that. I don't think that's going to happen. It'll be moving in that direction because the money follows the news, and somebody knows a lot more than we do because somebody has to have inside information. Very seldom do you get the exact high or low or anything, so just be careful, that if the market's going down, you don't want to, stand in front of it. I remember this one particular trade that I did was in 2008, was in Lehman Brothers. I believe the price was around $17 a share. It was making a beautiful 3-drive to a bottom pattern. It had all kinds of symmetry with it, and I was buying Lehman Brothers. I believe it was 17.5, and I was only risking a point, and putting my stop at 16.5. Well, the day that I put the order in was the day that the all hell broke loose, and I actually got a better fill because my buy was filled closer to my stop point, so I got blown out in a matter of seconds because my stop was within $1. But that's why you've got to protect yourself in these markets, because they can go literally wacko in any one direction, and you don't want that to happen. That's not very much fun. So your homework for tonight or tomorrow or over the weekend is listen to that video. It's only about 25 minutes, maybe 30 minutes, but a lot of those folks on there I happen to know because I was on the floor trading with them, back in the 80s. So it's really something to go in and remember that, because boy, unless you live through it, folks, you have no idea. And one of the featured people on this tape is one of Tom O'Brien's good friends, is Tom Sosnoff, and he does a really good job of saying how crazy things really were. But just remember that it'll probably be a great opportunity no matter what happens when you do it. We've got several markets that are in real major distress. They're very, very close to saying goodnight, and I wanted to go through them one at a time. The first one that we're going to look at here is the soybean market. We're going to be looking at March soybeans now because November will be going off the board here pretty quickly. So as you can see, if you take a look into Tiger TV, since August, the March soybeans have tested the 61% retracement from the summer highs from August low through September and October. We've now tested the 1250 area per bushel in soybeans 3 times. Now usually it'll fail on the 3rd time, and what we're doing today is we're retesting that same area one more time. So this is a spot, because if they can strengthen from here, they've got a chance, to rally into the harvest time. But that's a long way from where they are right now. The shorter term cycle is just pretty much the same. I'm going to put that up to. I should put it up on an hourly chart so that we can see it a little bit better. Yeah, there you go. We'll look at the hourly chart on soybeans just to show that if you do trade these things, you can't quantify your risk, because it holds to these 618 and 786 numbers extremely well. It has a lot of symmetry and harmony. As you can see, if you go back just a few weeks ago, it had a beautiful ABC to the downside, and it rallied up to the 786, and that made it a really nice, trade from both sides of the market. The next one that I would like to go through is the crude oil market, and it is doing the same thing. It just looks like it's getting ready to, head to the Antarctica, because it certainly looks like it's ready to break down. We've had also 3 tests on the crude oil. We're making the 3rd one right now at this 96 per barrel level. That's the 61% retracement coming off of the April low. We hit that last week twice at 96, and now what we're doing is we're going down and we are retesting those lows again at that 96 level in the crude oil. When it does that, the third time that it tests, it usually will fail. That's why when we have these 3 drive to a top patterns and 3 drive to a bottom patterns, they're reversal patterns. But when they're in the middle of a congestion like you have now at key levels, that usually means that it's going to fail. What is good about it is if you want to buy crude oil at these levels, you certainly don't have to risk very much. You don't have to risk $1 a barrel. You know, if it gets 50 cents below that 61% retracement level, it's most probably going to go down to the 786 level, down around that 9100 level. So that's the main thing. Someone has asked a question about John Henry, the man who owns the Red Sox, who just won their 3rd World Series since 2004, which 2004 I think was probably the greatest of any of the playoff games and everything when the Red Sox beat the Yankees after being down 3-0. But I did know John Henry. I met him a couple of times. Once was in Miami Beach early in his career back in the early 80s, and he was a loose cannon back in those days. Boy, he was in the Ferrari mode with all the little toys and stuff, and he's since mellowed and is, a huge successful businessman with what he's done. He's had some tremendous years, and the most amazing thing about him is no matter what happens to him, when he has a bad year where he might be down 35 or 40%, the very next year he's right back in the game, and still playing strong. I don't think he's involved with the trading too much anymore, but I'm not really sure. He's in a totally different league than what I do, but he's a pretty nice fellow. He's a little bit younger than me, but I did meet him a couple of times. He was a little headstrong and a little arrogant back in those days, but I'm sure he's not that way now because I've seen him, on several interviews, and he certainly seemed like he's mellowed. But when you've been around as long as I have, you have met a lot of people. The question is whether you some of them have either passed away or it's going to be a question of they are just out of the business because they just don't like it anymore, and that happens. People just, they just get tired of trading, and they don't like it, or whatever the reason happens to be. It doesn't, it doesn't really take very much. If they don't want to do it, they certainly don't have to. That's the bottom line. Okay, now we've got one other one that is really getting close to being in big trouble, and that is the gold market here. If you'll bear with me a second, all I'm saying about trouble is that we're sitting right at a 38% retracement here, and if the gold can hold here, it's got a chance to do. Gotta take a break. Tell me quicker.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risks, charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Andy Hecht, the host of the Commodities Hour, recently launched his newsletter service, the Technomental Commodity Report, and only 6 weeks in, Andy has already recorded a triple-digit winner. Andy advised his subscribers to purchase a long-term call option at 46 cents on July 11th, and then sent out a special update Friday, August 16th, advising his subscribers to close that position at $1.40. That's a 204% profit in just 5 weeks. The Technomental Commodity Report by Andy Hecht is released each Thursday morning, and right now you can get a month-long free trial to this subscription while locking in the low introductory rate of only $39 a month. Andy Hecht has been a commodities trader for over 3 decades. Let his experience work for you. Sign up for your month-long free trial to the Technomental Commodity Report today at TFNN.com.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, this is Larry Pesavento with the Futures Hour for TFNN. If you have any questions, it's 877-927-6648. We've got the Dow Jones down 10 on the day. New York Composite is up a little bit. NASDAQ is down just a little bit. And the S&P is down a couple of points. This is a last day of the month, so there'll be some window dressing. It's really hard to get the market down a lot on the last day of a month that's been up this strong. And as a matter of fact, this is only the 4th time in history where we've had positive closes on the upside back-to-back for both September and October. So we're having a lot of outlier events, which we should have, given the fact that we've made these major patterns here, and we're coming into some pretty strong cyclical highs, at least from looking at it from the standpoint of, the cycles that we look at, these astro cycles that we look at. I posted the chart of gold in here because we are right at a 382 retracement coming off of that explosive move after the Fed acted last month, and we got up to 1365 the other day, which was 1362.5, which was close to the fib point at 1365, and now we're making a 382 retracement. So it needs to hold the 1317, 1319 area in gold in order to be really super bullish. If it goes down more, it'll just go to the next support point, down around that 61% retracement, down around the 1295 level would be my guess, is what I would be expecting if in fact it does that. Now I wanted to go on to the next commodity that we want to talk about is the corn market, because we've had a huge move in corn to the downside. And I have to commend our good friend, Mr. Z, called in yesterday from the Tiger Den, and we were talking corn because, folks, 9 months ago, when corn was trading just under $6. I happened to be speaking to John, and he told me that he had a lot of work that said that the corn was going to go to $4.25 a bushel. And boys and girls, as we speak today, December corn is trading at $4.29 a bushel. We're having 3 drive to a bottom pattern is starting to form there now, and I wanted to to put this chart in here and also commend John for such a wonderful job that he did on that. And this was a long time ago. Corn was just under $6 a bushel because I remember speaking to him most accurately about what he was saying in the market, and he stuck to that almost all the way. I don't know if he was short that all the way down, but this was the prediction that he gave because I saved it, and I still have it. But it really does a good thing. And that's one of the advantages of being in this particular den is because you've got some really smart people in there, not just John or Mr. Z himself, but there's a whole lot of other folks in there that are very, very good at what they do. And then you've got on top of that Basil Chapman, who's going to be giving a show next Friday, I believe, that is one day. And believe me, if you can spend one day with somebody like Basil Chapman and you want to learn the markets, come on, man. What do you? And they give you so much stuff extra. That's a no-brainer. It's like going to to Stock Trading University when you get to deal with somebody like him. I hate to miss his show because he's so good at what he does. When markets are going up, Basil's not in there trying to pick a top. He's buying retracements and stuff. He's a real pro. So just remember, if you're learning to do this business, try to launch on to his full day show that he's got. I mean, you don't get people to do full day shows anymore, and believe me, you'll certainly get your money's worth. And he's a real expert. He's a total pro. Same is true of Steve Rhodes and of course Tom O'Brien. That's of course Tom is probably out celebrating the fact that Boston won another World Series. So that was great. I really liked that to see the Boston won again. Okay, we've covered the corn market. We're getting really very, very close down to that 425 level. Next week, we're only 3 cents away. We could be there today. So next week we'll take a look at it. What I'm going to do is I'm going to wait for the bottom to form because we're in the harvesting pressure now, and you'll probably the market's probably going to go flat a little bit just because of harvest selling. But we'll be watching it, as we move down the road. We've already covered soybeans to tell you that they're at the moment of truth, and they're certainly not going anywhere during harvest time. I would not think. So we'll have to just have to wait and see if this is going to be one of those times. Okay, folks, we'll be back after a break.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Basil Chapman has just announced that he will be hosting a one-day online master trader class. Friday, November 8th, Basil Chapman will teach you the essential fundamentals he uses when trading the market with his Chapman Wave methodology. Included in this full-day online master trader class is 1 month of Basil's daily newsletter service, The Opening Call, a $128 value, as well as a copy of his CD book introducing the Chapman Wave methodology, which usually sells for $249. Join Basil Chapman for this powerful one-day online master trader class Friday, November 8th, which will be archived if you can't attend live, where he'll give you a complete understanding of the Chapman Wave methodology and how to apply it to profitably trade any market in any time frame. For all the details and to reserve your spot while taking advantage of early bird pricing and saving $200 off the regular price, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can't use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, the next chart that I'm putting into Tiger TV is the chart for March wheat. And as you can see, we are heading down towards the 61% retracement, which is down about another 10 cents. So this, with the fact that we have soybeans and corn and the wheat all moving towards that same level, we're in the harvesting pressure right now. So it's very hard for the market to explode out of here. It takes a very, very wet harvest time so that they can't get the crops out of the field in order to get a really sharp bull market, and that doesn't appear to be happening this year. So they're still under pressure, so looks like they're going lower, so there's no reason to try to catch a falling knife. Just wait till they make some type of a bottoming pattern, and then you'll have a better idea of where we're going to be. Someone asked the question about the stocks, and what is my overall feeling of whether I think that the stocks made their high for 2013 on Wednesday, and the answer to that is it's still too early to tell. We only came off 20 S&P points, at least so far, but they did start relatively weakly, but on the weak side, I mean. But the thing that we do know for sure is the one thing that we watched closely was the market in the euro, and now we're down over 230 points in just a matter of a few days in the euro. So that certainly tells us that we are going a lot lower in the euro over a longer time frame, even if we do rally from this level. So that's what we're watching. We do have a request to take a look at the silver, and I will be happy to do that. It only takes me a second to pull this one up because I watch it quite a bit. Hardly ever trade it, but I watch it a lot. It's just during periods when the market is really active, it makes it for a real. Hold on one second. I have to remove the wheat. There we go. We got silver showing. Now silver has a real interesting pattern here because this market that's been in this downtrend here is just about ready to touch the bottom part of the chart, and that usually means that you're going to have some type of bounce, but that's still another 30 cents lower. So there's really not too much you can do with the silver here. Silver yesterday rallied to just a shade under the 61% retracement at 23.10, and we've broken well over $1 an ounce from that level. So silver still seems to be, building a strong base. Now we made a lower. We made a low back in the end of June, as you recall. Then we tested the 61% retracement in August, and we retested the 61% retracement in October. And if we test it again in November, we're going to be coming down another 30 or 40 cents. So that's why you want to be patient here on the silver and also the gold, because the gold has a chance to just hold the 382. Now, if the gold only holds the 382 and silver holds the 61, then that's telling you that gold is the stronger of the two, and that's the one you want to be buying, because the precious metals, silver, is much more difficult to trade than the gold because of the liquidity and the fact that it has periods where you have some illiquidity, and if you have your order in at that time, particularly if you have your order in the night session, like during Asia, you would be under a great deal of extra risk that you really don't need. So that's what we're watching. I'm going to repost the gold, because that to me is the secret to where we are now. Because if we can hold this, we're trying to test it again down around this 1320 to 1319 level. If we can hold that 382 retracement coming off of the low from October the 19th, then we've got a really chance for a big move in gold. And if we fail, we're going to be looking at another $30 down in the gold market without too much trouble, because the high that we made just 3 days ago was the 61% retracement coming off of that old high that we made at the 1395 400 level. So that's the bottom line of what you're looking at in gold. The price objective, if the gold does hold from where we are right now, the price objective that we have would take us well close to 1,500, around 1,505, if we can hold this 382 retracement. But with the big move down today and being down all day, it's taken 1, 2, 3, 4 days to make the 382. This is why it's so important that gold must hold this 1319, 1317 level. Otherwise, it is headed for the cold slopes of Antarctica, and it'll go a lot lower. And if it's really bearish, it'll take out that 1250. And if it takes out 1250, this might be we've been looking at the highs in gold for the next 4 or 5 years or more. If we do take out that 1170 level that was our low in June, which is the 61% retracement from the low of 2008, that's the main thing that we're watching when we're looking at those particular charts, when we're looking at those. Now, a caller sent me a little instant message through the Tiger's Den to ask me about the euro and what would be the price objective on the euro. Well, we covered that a little bit the other day, but we'll do it again because it's had such a big move on the daily basis on the euro. We'll put this up and let you take a look at it because it fulfilled every potential objective that we could have on the upside when we were there. But the beauty of it is I'm going to just show you the strength of this move from the 618. There we go. That's what I wanted to show. Just one more second. There we go. And you'll see that after it made that 618 retracement just 2 days ago, we've broken over 250 pips. And that's really important, because if you go back and look at historically, every time that the euro has hit one of these key points, it comes off very, very fast. That's telling you that it wants to go a great deal more. Now, we've already broken through the 61% retracement of the low last week. And so that's telling you this market really is, wants to go a great deal lower. So just look for a place to, if you haven't already sold it, look for a place where you get an ABCD correction to the upside, and try to get short, because I think that we've made a major top in this euro for quite some time, and we'll see. Now, if we happen to turn around and get above that 138.25 level again, then all bets would be off, and the U.S. dollar would most assuredly be going a great deal lower. But right now it's holding its own, and that's what we're watching to see. The first level that I'd be looking at of any significant support in the euro would be down around 134, which is the 61% retracement coming off of the September lows. But the fact that we're down over 200 and some pips in a matter of a few days is really quite important from a technical standpoint, without any stretch of the imagination, at least from my point of view. So we've got three. I'm going to review here just a second here. We've got three major markets that are really testing it, and that is, one is the crude oil market, the second one is the gold market, and of course the third one is the soybean markets, followed by wheat, and then also by corn. So all those are coming together at the right time. So we'll see if this is going to be a spot where it's going to be holding or not. We are just touching the 382 retracement right now in the gold market. So if it doesn't hold right here, then we are looking at something a whole lot more sinister to the downside in the gold market. So we'll know that relatively soon. We've had another nice move, very similar to the euro move, and that's in the Canadian dollar. It made the same type of pattern that was made by the euro. This would be on a hourly basis, but you'll see that the Canadian dollar went right up to the 786. It was a very symmetrical. It measured perfectly on the AB equals CD thunderbolt pattern, right to the exact spot. And so we've had a completed pattern there. And your first objective on that would be down around the 103.35, which is another 100 pips from where we are sitting right now in the Canadian dollar. So if you do trade these currencies, and believe me, that's where all the action is, this has been a nice one to look at, because it's relatively quietly traded. You don't have anything really goofy happening like you have with the euro sometimes with the Federal Reserve. The Canadian trades a little bit better, as does the Australian dollar. That's another one that also fulfills very nicely. So all of that is coming together, and we'll see if this is going to be a pretty significant down move in the Canadian dollar along with euro, which is basically telling us that the dollar has made some type of major support here at the 79 level, and we're trading above 80 in it now. So that's telling us that it's had some type of support at that point. Now, I wouldn't be doing my job here if we didn't go and talk about the bonds, because we've had some major movement in the bonds over the last few hours, up and down. We just completed, just a matter of a few minutes ago, we just completed a Gartley pattern in the hourly chart on the Treasury bonds. And if you'll give me a second, I will put this up into the, hopefully I will. Uh-oh, I have a major problem here. No, it's not major. I just have to move this up a little bit, and then I'll be able to see it. Okay. There is the chart for the hourly of the Treasury bonds. We had a perfect 61% retracement over yesterday's move that went up to the 135.08 level. Then we came down to the 134.10 level that made the ABCD pattern, and so now we're looking at whether bonds will still hold here. I think the best trade that we could possibly get over the next few weeks, if we do get it, is the daily bond chart. And if we do have a chance to get the bonds up around this 137 level, I would really be very, very bearish bonds at that time. However, I mentioned this yesterday, but I believe that it's important to mention again today, and that is when you look at the Treasury notes, which are your shorter-term paper, the Treasury notes have already exceeded those highs. It's just been an amazing move in Treasury notes. Short-term rates have really come down a lot. Now that usually means that there's a flight to quality, but we haven't seen that with the stock market. So why would this be, why would the notes be going down so much? Or the yield on the notes be going down so much, but that's what's happened. We've already gone 50% more than the March to April rally that we had several months ago, back in March to April of 2013. The September to November rally has, in notes, has already exceeded 50% of that. So they're much, much stronger in the notes. Whether that is a safety mechanism or not, I'm not sure, but it certainly has affected the yield curve with short-term rates, dropping more than the long-term rates. So we'll see if this is going to be indicative of what continues, to happening in our interest rate markets. We've made a major top in the bond market. I don't think there's any question about that. We've looked at these long-term charts so many times, it's just sort of superfluous to go through it again. But it looks to me that we've had a real eye-opening on the part of the Federal Reserve that maybe this program that they've been doing with this QE2 is how they're going to unwind these things, and that's what's going to be really interesting to watch, because the unwinding could be the thing that makes it certainly a lot more difficult. Now, I wanted to show the Treasury bonds on a little bit shorter time frame here because of the fact that we've had some really nice moves, and we are completing we're testing this 382 retracement again in the Treasury bonds. We're just a heartbeat away from those at that same level, and this could be an area where the bonds are going to find some major support down at this 130, 134 level, because this is only the second really good correction we've had since October the 16th. We had a 2-point correction during the 18th to 21st of October, and now coming into the 1st of November, we're having another 2-point correction. So both of these have told us that the market has held up relatively well at those points. So keep in mind that it's very, very important where we are right now in the bonds to hold this 134 level. This is the main thing to watch, are these support levels. I would like to mention one more time, because I like Basil Chapman very much, but he's giving that one-day seminar coming up. A full day with him is really worth it. If you're interested in technical analysis in the stock market, I don't think you can spend a better day with anybody that can give you a whole day, plus the follow-up and all the information that you get. It's really good. So this is Larry Pesavento for TFNN. We got a break coming up. If you have a call in, it's 877-927-6648. And we've got the Dow still down just a little bit, but just by barely. It's only down 5 now. So we'll be right back.
Have you subscribed to the Gold Report yet? On Wednesday, August 14th and Thursday, August 15th, Tom O'Brien advised his Gold Report subscribers to close out 6 of their 9 open positions, all winning trades ranging from a 10.69% profit to an incredible 48% profit in just one equity. Tom O'Brien brings an incredible wealth of knowledge and experience to the gold market and the equities within the industry. That's almost 12 years since this powerful newsletter first began. And right now, you can get a 30-day free trial to the Gold Report by visiting TFNN.com. Make sure you're a subscriber as this volatile gold market makes its way back into positive territory after declining all the way from $1,900 to under $1,200 an ounce in only 2 years. Get your 30-day free trial today by visiting TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rose, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks, and I'm going to end the show talking about the stock market, where we are. I put up the Dow Jones chart with the Bradley model overlaid upon it. The main reason I wanted to show you this was the fact that we have this 5-wave reversal pattern occurring in the Dow Jones. And folks, remember where we are in the S&P. We've made 1.27 expansions of the move from August through October. We've made far, far better than 1.618 in the NASDAQ and the Russell. So the Dow Jones is lagging very, very badly. I mean, it's just been a giant congestion since May 25th. On May 25th of this past year, the Dow was trading at 15,577. Now it's 15,611. That's 44 points in 7 months. That shows you how badly the Dow has been lagging. Not only is it making this reverse point wave pattern, but the highs between the peaks have been absolutely perfectly, which makes it a 3-drive pattern along with the 5-wave reversal pattern. So just keep in mind that this is starting to unfold, maybe like we think it's going to. It's still way too early, but that's what happened with the euro. We didn't know the euro was going to be down 200 points from the high, but the price objective was there. But those are the things that we're looking at. They might not always work, but the probabilities are such that we have a lot of things to tell us that we are, very, very close to something, pretty dramatic happening in the market. Whether it's going to happen or not, I don't know, but neither does anybody else. But the one thing I do think you should do is you should go into Tiger TV and listen to that link from nightly business news from 1987 on the 19th of October, and listen to what happened during the crash, because I remember it most vividly. It was as bad as 9/11 was. The crash of '87 was far more earth-shaking. It was just really, really damaging to a lot of different things. But it only lasted a few days, and that's when the plunge protection team was brought in. The Secretary, Treasurer, Federal Reserve, and so they were able to, open the doors to the vaults and give people money so that they wouldn't fail. And whether it's going to happen again, it's already happened again with Too Big to Fail during 2008. But one of these days, history says that someone's going to look at the bathtub and there's not going to be any water in it and the baby's gone. So we've got to be very, very careful with this. So watch that video if you get a chance. If you don't have a chance, I'm sure you could Google and find it, somewhere, on the internet, because almost everything in the whole world has been put on the internet. You're able to find it somewhere. Or you could just email me. I would be happy. It's just larrypesavento@gmail.com. I would forward the link to you if you like. But it's something to really watch. It's brought back a lot of memories, and it's something I think is very, 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 very important. So someone asked the question, is there any gold in Fort Knox? I don't know that. I don't know if anybody else does either. But I've heard stories that most of the gold was transferred to the Federal Reserve Board, which, that really shouldn't happen, because that's a private corporation. You shouldn't be taking, assets from the American citizens and consumers and giving it to the Federal Reserve, because they are a private bank. They have nothing to do with the federal government. So I think that's an important thing that you want to remember. Okay, that's it, folks. Live every day in an attitude of gratitude, and may God bless.
What's the one thing that pulls people back from the breakthrough that they're moving towards? What's the only thing that really stops people from taking action? You and I both know the answer, and sure, we can come up with the reasons why we're not where we want to be, but the only reason that we don't do more with our life is fear. Or if you're an overachiever, call it stress. Simply put, there's something that happened to us in our past that's holding us back from the life we deserve, yet you and I are okay, we're here. So why should we let our past control our future? Exactly. We shouldn't. Hi, I'm Steve Rhodes with TFNN.com, and when it comes to your trading and investing, I can help you overcome your fear of loss. Together, we'll turn weakness into strength with a system I've developed called Mastering Probability. I'll teach you how to make your money work harder for you than you do for it. I'll teach you the tools that provide financial freedom. Go to the homepage of TFNN.com, click on my name, Steve Rhodes, and begin your journey of mastering probability risk-free. It's time to become a pioneer of your future versus a prisoner of your past.